Dale, thanks for having me. It's great.
Oh, you're very welcome, Gregor. Very nice to meet you.
Nice to meet you.
So to share your screen, it'll give you a choice when you of which screen, if you have multiple screens, which one you're going to use.
Actually, I'm just going to pull up my website. Can I do that? Can I put it?
Yeah, in fact, I have it up if you want me to show it.
Yeah, if you can just pull that up.
Okay, I'll make myself a presenter again. So I'm taking the screen.
But it's great to be around a room full of traders again. I've kind of been, I was on the street for 20 years, and I went out on my own about, some time ago, decade ago, and I've been trading on my own. And,
all right. Yeah, it's a lonely game. It's great to be able to collaborate with people, don't you think?
It is. And it's interesting to hear someone say long term is a week. That's kind of interesting. I'm kind of out of that game now. It's I was taken out probably I would say I decided that I can't compete with the robots, and it happened one night when I was trading natural gas, and I know that is the most toxic trade there is. But
Widowmaker.
Yeah, totally. But one night I put on a short. I was in Sacramento. I live in Northern California. I put on a short, and I get to Sonoma County where I live, and I open up my phone and I see it's down 3%. I go, great. I look at my position, and I was taken out. So what happened is a bot came in, probably at the most illiquid time of the night, came in and moved the natural gas futures up 5%, took it down 5%. And it was trading right around where I put the short on. So
they cleaned everyone out.
Yeah. So it's like, how can you compete with that anymore? So
well, I don't trade. Yeah, there are lower beta things to trade.
Yeah, and
natural gas probably the highest beta. But you know what I'm interested in here, Gregor? As you said, you're on the streets for 20 years. Tell us what you're doing before you got into the industry, and what was your foray into it. A little bit about your journey.
Okay, so I was, as an undergraduate, I was always interested in the markets but mainly in politics. And so when I applied to graduate school, I applied to 3 schools, University of Texas, George Washington, and DC, which gave me a nice PhD fellowship. And I went there, and when I was there, I worked in the government. I worked. I don't know if you remember the S&L crisis, but I worked at the GAO, which is with the General Accounting Office now, which is the research arm of the Congress. I worked on the S&L crisis, and it's interesting. I was kind of the quant, the guy that was doing all the data analysis. And when a congressman needed a study of, say, the S&L crisis, they would call us up, and we do the study for the Congress. So anyway, I crunched all these numbers of all these S&Ls of how much it would cost the U.S. government to shut them down, and we estimated it was about $22 billion at the time. And we said, if the government waits, it's going to cost the government $200 to $300 billion. And they did wait 5 years. They didn't want to increase the deficit, so
that was like during the Keating 5 time.
Exactly,
right?
John McCain was one of them, right?
And that's when people found out in Arizona there was no shortage of sand, and that wasn't that all those tax shelters that went bad. And I think James Woods even made a movie about it.
Right. Dale, what was interesting, I was looking at S&Ls that had they had negative equity of 60% of their total assets, but they were still operating because of deposit insurance, and that's what in economics, that's what we call moral hazard, which people say that that's what the Fed is doing now to the markets by backstopping. So and when I think I always think of, when I think of China and people talk about China and about they have all this debt, well, they don't really have market forces that are pounding the Chinese economy. It's still a command economy, right? So what you got to watch, I think, in China is the exchange rate to see where the capital is going. Are they going to lose control of the capital account, and there's going to be massive capital fight? You're going to see a collapse.
They had a little of that going on last year, the last few years, haven't they?
Yeah, they did.
And so do you think that the yuan is going to really depreciate in value? You know, the Chinese said they weren't going to weaponize the yuan in trade talks, and everyone thinks there's going to be a deal done. Do you think they're going to let the yuan go to 7.5, something like that, to ameliorate, even if they have a deal, they're still the yuan's headed lower?
I think it's all going to depend on capital flows. So you know, they have, again, they're a command economy. They just slap on capital controls anytime they have capital flights. So you know,
throw people in jail.
Yeah, that can, you know, they can you know, markets eventually will overpower governments. But you know, if their reserves get down to, say, I would say the magic number is about 2.6 trillion for them, and they're about 3.1 now, 3 trillion. If, you know, if they start seeing it go below 2.6, they'd probably let the currency go. So no matter what kind of deal they strike, I mean, you know, it's funny when I hear people say that they want to have a market currency. Well, if China had a market currency right now, it would be much lower in value.
Okay.
So that's interesting. So that, you know, when you look at China, when I hear all these people talking about China's going to blow up, you got to remember they're still a command economy, and like you said, they can throw people in jail. You know, if they don't get on board.
So you think that could, because they are a command economy, that trumps, excuse the pun, any kind of deflationary or debt problem, debt crisis, ghost cities, what GDP really is, command economies, because we won't know it, or what?
Probably a combination of both. You know, they again, you know, when the economy slows down, you know, President Xi gets on the phone and he calls up 5 banks, lend to these construction companies, and they build a city that you know,
no one lives in.
Yeah, that no one lives in, a ghost city. So, and it creates jobs and so on. So that, you know, that can go on for a lot longer than we think it can, and it has. So
certainly has. I mean, the Shanghai up until recently was reflecting some of the negative feelings towards those assets, but what a nice recovery with the market. So why don't we go to here, Gregor? You're an economist. What's on your radar? Go ahead.
So I wrote a report last September, I think September 21st. I published it. I called the gathering storm in the U.S. Treasury market, and it's, you know, it was like someone said, you know, this post is so big you can see it from outer space, but it was you know, it was a tome, and basically I looked at what's happening in the Treasury market, and and I explained why the emerging markets fell apart last year, and you know, there was going to be some volatility coming in the stock market. And it was basically the U.S. Treasury last year, from January 1 to September 30th, I think it was, or no, to the end of August, the net increase in the stock of marketable treasuries they put in the market was $1 trillion. So, and that had to do with the way, you know, there was a debt ceiling problem in early the year before, and they had to, you know, when we're going to come up against this now, where the Treasury can issue new debt, they're going to have to run down their balances at the Federal Reserve. So you're not going to see a lot of debt coming into the market. So they put this $1 trillion in the market, and it basically sucked out all the liquidity from the emerging markets, and interest rates started to go up. And the peak in the S&P coincided when you had the breakout in the U.S. 10-year. I think it went above 306 and went to 326, and that was the very same day of that breakout was the peak in the S&P. Okay, so now this year, I think I call it the power of zero, which is driving the risk markets again, meaning that, you know, people don't want to get zero interest rates. If you remember the old economist, I think it was Walter Bagehot, who said that John Bull can stand many things, but he can't stand 2%. Well, you got to knock that down another 200 basis points, or even -%. So
you're looking for much lower yields now here, Gregor?
Not much lower, but I mean, if we stay down here, and if the market believes we're going to stay, if the Treasury's not going to go up to 3%, you know, risk is they're going to be putting on risk. Money's going to be moving into emerging markets and so on. But I think the key is going to be you got to watch the U.S. 10-year for the risk markets. Get back above 3%, then we got a problem. So
Okay.
my favorite global trade at the beginning of the year, if you go back and look at the slide, was cable. I think everything's going as expected. This thing's going to fail. Tomorrow they're going to vote. They're going to vote against a no deal Brexit. There's not going to be any resolution. They'll vote to extend Article 50, and then Labor's going to have to start pushing for a second referendum. I think there's if you look at the latest polls that I've seen, there's support for to stay in Europe, and so I think you'll get a second referendum. Cable trade to 135 or higher. Then you're going to have a lot of political instability in the UK until the referendum takes place, and I think that's going to win overwhelmingly. Has a lot of support. If you just look at I think I published. If you just look at the demographics in the UK right now, and I'm quoting from a Wired a magazine article, it says, of the 600,000 Brits who die annually, it's postulated that 80% turned out for Brexit, with 2/3 voting to leave, which breaks down to 320,000 voting to depart the EU and 116,000 wanting to stay. Meanwhile, 700,000 youngsters come on age each year in the younger cohort. 65% voted in the referendum, 87% voting to remain, suggesting that Britain gains 395,000 Remain voters, and they lose 60,000 Leave voters purely by teenagers turning 18. So, I call that the demographics of death is going to win the election.
Okay, so 135. Dollar's been on a tear for Dixie from 88.5 to 97. A few attempts at 97. With the scenario you're painting. You think it's going to take higher yields because the dollar actually has been rallying with a fairly buoyant bond market. Do you think the dollar rally has more legs, or we're in a peaking mode?
No, I think we're going to break out. We came within. It's interesting. The dollar index came within like 5 basis points. The cash, I'm talking about the cash, Dixie, came within it came within about 5 basis points of breaking out of, I think it was 97.71 or something. So we got up to 97 last week.
Close enough for government work.
Exactly.
It's in there, so.
Exactly.
Yeah.
And I guess the traders came in and rejected it, but I think it's going to break out. And and remember the Dixie is 60%, the euro.
Correct.
I don't know what the pound is, maybe 10 or 15%. So I think you can have the pound and the Dixie going up. So I think we're gonna, we could see 101 maybe at the end of the year on the Dixie.
Well, then the euro pound trade would be a short euro pound would probably be something on your radar then, right?
Yeah.
Because you're looking for a pound to outperform.
Exactly. Exactly. That's a great trade. I don't really focus too much on the crosses. I'm not really an FX trader, so.
How about metals? We've had a hell of a run in gold from 1160 up to 1345 and pulled back about 50. I was on your blog page or website, and I'm just guessing when you're talking about how do you become a trillionaire, I think you're probably talking about Zimbabwe currency. Is that correct?
Exactly.
Is that how you do it? You convert your dollars. You bring $100 and convert it, and you're a trillionaire.
And that goes to a piece that I wrote last week called the.
So I know you have to be a proponent of gold. Am I correct in guessing that?
Yeah, eventually. Yeah, right. With the dollar rally, it's funny. The gold rally signaled the weakness, the rejection of the dollar at 97, 70 or whatever it was. So
yeah, the gold rallied with a relatively stable to strong dollar. Haven't seen that in a long time. Have you?
Yeah. No.
What's it mean? I mean, you probably have a deeper. To me,
that means that
it's rallying against all currency, all fiat.
And that's exactly what it means, or what it's signaling, that fiat currency is gonna, it's another round of QEs, or whatever you want to call it. It's coming, and it's interesting. You know, what's coming to the forefront, and I've been arguing with my brothers and sisters in from the monetary or the modern monetary theory school for years now, and now that's front and center because of you know, AOC and, you know, the Democrats, socialists are coming to power and so on. But you know, if you have people, I don't really understand. I don't think they truly understand quantitative easing, and I don't even think I understand it enough, and I don't think the central bankers understand it enough. It's more of a black box. But if you look at the way they put money into the system, you know, they increase their reserves. The way they're taking it out of the system, on the liability. So on the liability side, their reserves in the system, in the financial system, or banking reserves went up. That's how they purchase their assets. And the way they're taking it down is by reducing the balances that the U.S. Treasury has at the Federal Reserve. So basically, they're taking out. So when a bond matures, they basically they take it out of the checking account that the Treasury has at the system. So quantitative easing, quantitative tightening has been more of a fiscal, I call it fiscal on steroids. You know, not so much monetary, because it didn't create a lot of credit that that monetary policy is, you know, supposed to do.
It just created the need for people to go out and take risk to have return.
Exactly.
So the wealth effect was the whole motivation behind it. Is if you're not going to get anything for holding cash, it pushes you out on the risk curve.
Exactly. And then on top of that, with the disparity in wealth now, you know, I used to say that if you give a billionaire, you know, $10,000, they're going to buy Apple stock. If you give like a middle class person $10,000, they're going to buy an Apple. Okay, so they're going to consume it. So now that you have this disparity in wealth, the wealth is going to people with very high, low marginal propensities to consume. So it's really not getting into the economy. So the efficacy of quantitative easing is kind of dying out. And so you're going to see what they, you know, in England they call, you know, Jeremy Corbyn calls it the people's QE, the modern monetary theory. You're starting to see it seep into, you know, you're starting to see it on the left here, where the money should go right directly to the, you know, the consumer that's going to spend it, and that's going to be inflationary. So at the end of the day, we're going to have inflation. With all, you know, I don't know, this may be 5-10 years out, but there's going to be inflation, and that's probably why gold is such a good hold in the long term.
Any view on the energy complex?
Complicated because of shale.
Okay.
You know, shale, again, it's got a low, you know, my friends that are in the industry tell me that, you know, it's very capital intensive. You got to, you know, you run down your reserves when you open up a, you know, when you open up a new well, it runs down in 2 years, and you have to continuously put in, you know, capital. So I think it's kind of up in the air of where, you know, oil is going to go.
Okay. What do you have real strong conviction in that it's strong enough that you're assuming some risk going forward, or you're not? You know, that's okay. You know, being in cash and doing nothing is a position as well.
That's true. Yeah.
So
basically, strong. I have a strong view on cable because I think that's the way it's going to unfold.
Okay.
You'll see a 140 handle by the end of the year. And again, there's a lot of, you know, I could be wrong, and, you know, you have to have your stops in and so on. But I think we're probably in the short term higher S&Ps. If you look at the first 2 months of the year, we've only had 4 other times where the S&P was up 10% in January and February. And
so you are a proponent of as goes January, goes the rest of the year?
Not so much the rest of the year. I'm just looking at March. Okay, so there's only one year of those 10% years where you had the S&P up 10% and it was lower by the end of the year, and that was 1987. So, but 1987 was coming off of 1986, which was up, very high too. Let me see here. I think I've got it somewhere.
Have you been, Gregor? Have you been able to wrap your head around crypto? You have any
No.
view on crypto? It's hard for us older guys, isn't it?
I don't. Basically, crypto came in. Crypto was birthed, during quantitative easing as a new alternative to gold. I think that's the way I view it. But I don't think it's going to be able to replace gold. So,
okay.
I don't think. I don't focus.
Do you have levels that you'd be interested in adding, and is it mainly physical, or do you do anything in miners? Do you like the shares? You have
mainly it's mainly the commodity gold.
Okay. And is it?
You'll probably see some weakness as we break out on the dollar here, but
okay. Some people say, ever hear this? Don't wait to buy gold and wait. Is that your style?
Yeah.
Okay.
Yeah.
All right.
And again, a lot of times, I'll be, during the only position that I had on during the flash crash in 2011 was gold. Luckily, I even made money in that day just in my gold position.
So you mainly you trade for your account. I'm just trying to get a handle on it. Are you looking for subscribers to your blog here? Would you call this a blog or a website?
So Dale, what I've done.
How can I help you?
So what I've done is I've kind of gotten out of trading. I don't trade as much. I used to trade a lot. I don't trade as much. I feel like I can't compete with the bots. I'm not an FX trader where all the liquidity is. So
I like this quote up here, Gregor.
Oh yeah, that's a good one. Rudiger was a friend of mine. He died young, too young, but he was the professor of Ben Bernanke and so on at MIT. But anyway, so what I've done, Dale, is I was going to go to a paywall, but a lot of my people that subscribe to my blogs are from countries that had huge devaluations last year. And so I said, okay, we'll do it on a donation basis. And, even these guys wanted to donate. They called me and they said they wanted to donate, but they can't because PayPal is not allowed in their countries because they have capital controls on, because the government doesn't want them taking, currency out of the country. So, or converting into dollars. So
yeah, you think things will continue to get draconian? And how about here in the U.S.? Do you think that could happen here? What's your outlook for our country? There's so many gloom and doomers out there. What do you think? You think we'll muddle through and get through this, or do we have to pay the piper for all these years of accumulating debt and ballooning both trade and budget deficits?
Eventually, we're going to have to pay the piper on that. If you look at why does the yen rally every time there's a problem in the world? Well, if you look at the net international investment position of Japan, they have the largest surplus. It's like $3 trillion. So there's a lot of, the Japanese have a tremendous amount of assets offshore that they just move back in. If you look at the net international position of the U.S., it's a negative $9 trillion. So there's, money could just fly out of this one. I think you're starting to see money leave the U.S., foreign direct investment down. That could be because of the politics right now. There might be some retaliation, against our government. But, the U.S. is vulnerable in that sense, that we have a lot of liabilities out there. And we definitely don't want to, do anything that's detrimental to our reserve currency status. So,
why do you think China and Russia have been such large accumulators of gold? Is there, what's the strategy?
Because I think I have a lot of friends in real estate, and they said the reason why the Chinese are buying up U.S. real estate is because they think that, the U.S. is going to go into this hyperinflation or something because of our budget deficits, and then we're not going to be able to finance it. We're going to have to monetize everything and so on. So I think that's, they don't have
I thought they were buying property kind of like to with some flight capital and a place to come outside of China as they became more draconian. You're saying they're buying property as an inflation hedge?
They're buying property in the U.S. That's why they're probably not buying U.S. stocks, but they prefer,
real estate. Yeah, they come over with suitcases full of money.
Exactly.
Yeah.
So, I mean, this guy's high-end real estate, so that's, he's just talking to some, the very rich Chinese and so on. So I think, there's not a lot of confidence that the U.S. is going to be able to sustain this, and that's why they were buying gold. The Russians have been buying gold for years. I mean, if you look at it.
Yeah. Let's wrap it with this. Euro, so you're bullish a dollar, that's going to mean lower euro. Europe.
And by the way, Dale, they need to be. I hope they're working on a 2-speed euro right now, because Europe is going to have another existential crisis here pretty soon, unless they can work this problem out with the North and the South. Growth rates and the current account surplus in Germany. And the Germans are going to be the next on Trump's list, by the way, I think.
With auto
right.
tariffs.
Right.
Okay. Well, Gregor, it was nice having a conversation with you. Glad to meet you. And, we have your Twitter handle right here. What's the website for your
The
blog?
website is global-macro-monitor.com.
Okay, and Gregor's Twitter handle, you can see him pointing it out right here at Macromon, not man, Macromon.
Right.
So I really want to thank you so much, Gregor, for hanging out with us today and having a conversation. And I encourage people, you have a lot of great content there, and encourage people to check it out and reward Gregor for the hard work and research and publishing, which, takes a lot of effort and man hours to do, to keep people informed of what's happening out there on our planet Earth. So, very nice.
Thank you, my brother.
All right. Yeah. You're my trading warrior brother now. You're in the club, bro.
Okay. Thanks, man.
All right, Gregor. Gregor Samsa, everybody. You're very welcome, Hamid. And everyone that's Turnaround Tuesday, good hunting the rest of the day. And see everyone tomorrow. Remember, don't just count your pips, count your blessings. Adios. And thanks again, Gregor.
Thank you.